This is Agentic Wave, your gateway to the latest breakthroughs in AI, the tech that's transforming how we live, work, and create.
Okay, let's talk about OpenAI. I mean, you know the name, right? You've probably messed around with ChatGPT, but behind all that AI magic, there is a business story that is just, it breaks all the rules. And it really all boils down to one absolutely mind-blowing number. Yep, $500 billion. That's a valuation some folks are projecting OpenAI could hit by the end of 2025. Just let that number sink in for a second. We're talking $500 billion for a company that isn't even public. And to give you some perspective on just how massive that is, a valuation like that would make OpenAI the single most valuable private company on the planet. It would literally rocket past giants like Elon Musk's SpaceX. So the big question is, how on earth did it get there? All right, let's get into it. The way OpenAI even got to this number, well, it's probably not what you're thinking. See, this wasn't your typical funding round where the company itself gets a big injection of cash. Nope. This was something called a secondary sale. Basically, employees and some of the early investors got to sell their existing shares to new investors. And the price those new investors were willing to pay, well, that's what set this insane $500 billion valuation. Okay, but a number that huge, it needs a heck of a story to back it up, right? And believe me, OpenAI's story is all about one thing: explosive, absolutely unprecedented growth. I mean, just look at this timeline. It's not even a curve, it's practically a vertical line. We're talking about a jump from $29 billion in early 2023 to a projected $500 billion by late 2025. That's more than a 17 times increase in just a couple of years. The launch of ChatGPT? Yeah, that was the rocket fuel. And what's driving all this? Well, a huge part of it is the user base. I mean, a truly massive user base. Projections for April 2025 are suggesting ChatGPT could have 500 million, not monthly, but weekly active users. Now that is the kind of scale that gets investors to just open up their checkbooks. And this slide really just nails the point about speed. Hitting 100 million users in just 2 months? It's unheard of. To put that in context, it took Instagram 2.5 years to hit that same milestone. This is, without a doubt, the fastest product adoption maybe in the history of technology. But, okay. Here's where things get really interesting. Here's where the paradox starts to creep in. Because hiding right underneath this incredible story of growth is an equally explosive story about, well, about how much this all costs. So let's take a look at the projected financials for 2025. On one hand, the company is on track to bring in a massive $12.7 billion in revenue. That's incredible, right? But here's the catch. In that same year, it's also projected to lose $9 billion. Yeah, you heard that right, lose. And this isn't just a one-off, short-term thing. Not at all. Projections are showing that OpenAI could burn through a staggering $115 billion by 2029. I mean, just think about that. This isn't just spending money to grow. This is burning cash on a scale that we have literally never seen before. So this brings up the most obvious question in the world, right? Who in their right mind is willing to fund these kinds of astronomical losses? And more importantly, why? Well, the answer reveals a completely new way of thinking about investing, especially in the world of AI. If you take a look at who actually owns this company, you start to see just how weird this whole setup is. It's not your typical long list of Silicon Valley VCs. Sure, Microsoft has a huge stake, around 30%. But then look at this other slice, the employees. They own almost as much as Microsoft does. For a company of this size, that's just incredibly rare. And the why behind all this money is just fascinating. For a company like Microsoft, this is what you'd call an existential bet. I mean, their entire AI strategy pretty much hinges on OpenAI. For NVIDIA, it's almost like a circular economy, right? They invest money, and then OpenAI turns around and uses that money to buy, you guessed it, NVIDIA's GPUs. And for other big players, they're making a massive bet on the future of AGI, artificial general intelligence, this idea of an AI that can do basically any mental task a human can. But of course, this kind of relentless fundraising, this non-stop strategic investment, it comes at a price. And that price is paid by the very people who believed in the company early on. And it comes in the form of something called dilution. This quote from the Financial Times, man, it just says it all. After raising tens of billions of dollars, all those historic, traditional VC firms that got in early, we're talking big names here, they're all going to end up owning maybe 10% of the company combined. And here's the result of that. In a truly stunning twist on the typical Silicon Valley script, the employees at OpenAI are set to own nearly 3 times more of the company than all of its traditional VC investors combined. Think about that for a second. So yeah, this is all because of that concept I mentioned, dilution. It's pretty simple, really. When a company needs more money, it issues new shares. But when it does that, the percentage of the company that existing shareholders own goes down. And with OpenAI raising billions and billions and billions of dollars, that whole process has been kicked into hyperdrive. Okay, so let's put all the pieces together here. You've got this spectacular valuation, the completely insane growth, the astronomical cash burn, and this really unique ownership structure. When you look at all of that, you start to realize something pretty profound is going on. This isn't a normal company, and it's not a broken business model. It's a completely new playbook. It's the playbook for building what they call frontier AI, these massive, super advanced models that are just pushing the boundaries of what we thought was possible. And in this new game, things like burning through cash and massive dilution, they aren't seen as mistakes. They're seen as the price of admission. It's the cost you have to pay if you want to lead a technological revolution. Which, of course, brings us to the $500 billion question, doesn't it? Is any of this sustainable, or are we all just watching a giant bubble get bigger and bigger, just waiting to pop? And you know what the craziest part might be? The guy leading the whole charge, OpenAI CEO Sam Altman, he kind of agrees. He's on record saying that, yeah, we're in a bubble. He knows the market is frothy and has said that the current valuations are, and I'm quoting him here, insane. So that's where we're left, with this massive paradox. Is this unprecedented burn rate just the necessary price you have to build the future? Is OpenAI literally writing the new rulebook? Or are we just watching the biggest, most audacious gamble in the history of tech play out in real time? I guess only time's gonna tell.